Joining me now is CNBC contributor Gina Sanchez. She is chief market strategist at Lido Advisors. Gina, it's great to have you. All right, let's just run right through this. United Health is your first buy, and the shares, by the way, hitting an all-time high ahead of earnings next Thursday. What do you like about it?
Well, so this is a stock and a company that has been driving both top line and bottom line growth, and that is extremely important. They just had a setback because their acquisition of Charge Healthcare was blocked by the DOJ. However, they've just announced a new acquisition of LHC Group, which would add to their home health offering. And everything that this company has been doing is about growing, like I said, that top and bottom line growth.
And you like to lean in when they're at all-time highs, or do you feel like it's already priced, I don't want to say it, but priced for perfection?
Well, you know, it's interesting you say that. This company is actually trading at only a modest premium to the S&P 500 with regard to its PE. So if you look at it from a valuation standpoint, it's not extremely overvalued. And we actually still see some upside here. And if we go into that really negative scenario where we see a recession, which we don't necessarily buy into, but this is actually a very, very good recession proof stock. And so, you know, this is a stock that is showing that it can perform. If we have a really negative scenario, it's actually a great stock to own. And so there's a lot of reasons to own this stock, and we don't think it's too expensive right now.
Sure. And so United Health is one name that you'd like. The next is Albertsons, has a similar feel to it. Consumer staples, a little more defensive. Its shares, I think, have doubled over the past year. They report before the bell on Tuesday. But again, more exposed on the labor side. They just reached a deal, I think, to avoid a worker strike. Why do you like them?
So, you know, Albertsons is one of those stories, and it's a stock that, you know, that is very good in the face of inflation. And if there's one thing that we do think might linger, it's that inflation story. And, you know, as soon as we saw the invasion of Ukraine, Albertsons really popped up, basically saying, nope, you know, this is not, the reopening is not going to hurt us. We're still in demand. And, you know, this is a company that has also been driving tremendous growth, and it's actually trading at a discount, not only to the S&P, but also to the, you know, the sort of the foods segment of the S&P. And so, you know, the food retailers generally trade at a discount to the S&P 500. But here's one that you're picking up even at a better value with really strong growth.
All right. Albertsons up just under 3% today. Let's move along to your pair trade and financials, because that's really what everyone will be focused on next week. We'll start with JPMorgan. I'm going to say it, no surprise you think it's a buy. Everyone loves this one, even though it is down 20% the past 3 months.
Yeah, you know, the banks have all gotten hit really hard. I think the outlook around these recession fears, the concern around inflation, the Fed raising rates, and even the potential for those rate hikes to cause an inversion in the yield curve, none of that looks great for banks, obviously. However, you know, JPMorgan is a company that has shown that it can execute, and it got this double whammy in terms of getting hit, not only with all the fears I just talked about, but also because they announced OPEX spending. And everybody always gets nervous when a bank announces, you know, operations expenditures, because they're concerned they're not going to be able to execute. But this is a bank that has a track record on that execution. And so we actually think it's a really good deal right now.
Yeah, it's traded poorly ever since that earnings announcement. You're right. And maybe this one will turn things around. We shall see. The flip side is Citigroup, which you're still mourning. This is your bail today. Not a big fan of the name. By the way, it's kind of moved in lockstep with JPMorgan. So for all the quality differences here, they're not trading that differentiatedly.
Yeah, you know, I'll tell you, Citibank, it's a bit of a stinker. They have, you know, continued to have to slog through their, the reorganization of the company, and there's still a lot of wood left to chop. And now, the one thing you could say about Citigroup is expectations are so low that any execution could actually cause a small rally. But we think that it's still a bit too uncertain in order for them to sort of prove that they've turned themselves around.